Welcome back to our monthly real estate market update at Prize Capital Real Estate. I'm Jason Prize, the founder of Prize Capital Investment Research. As we move into February 2025, we're seeing some interesting price trends unfold across the Myrtle Beach single-family real estate market. In last month's update, I pointed out that weakness in buyer demand had caused some price indicators to slip into negative territory compared to a year ago. This week, another key measure of future sales prices dipped slightly, and in a surprising way. What does this tell us? It's another signal that buyer demand remains soft, and price trends are facing downward pressure. However, this isn't cause for alarm. There's no market panic. In fact, inventory levels ticked down slightly this week, meaning there are fewer homes for sale today than a week ago. It's common for January to have small fluctuations in inventory levels. If we were seeing a significant surge in new listings week after week, that would be a bigger red flag, but that's not happening. Instead, supply is growing gradually. That said, as inventory slowly builds and fewer buyers are making offers, more sellers are feeling the pressure to reduce their asking prices. This week, we saw an uptick in price reductions, which is unusual for the last week of January. So what does this mean for the months ahead? Let's take a closer look at the data. There's a lot to unpack this week, and these trends will be key in understanding where the market is headed next. The price reduction trend this week is not particularly encouraging. Let's start by analyzing the latest numbers and what they signal for the Myrtle Beach real estate market. In recent weeks, we've highlighted weakness in home prices. While we're not seeing dramatic declines or a market crash, most of our home price metrics are flat compared to this time last year. Essentially, home price appreciation has stalled versus 2024. At Prize Capital, we consider the percentage of homes with price reductions a leading indicator for future sales prices. Looking backward, we see that sales prices are not appreciating. Looking forward, we see continued softness in demand, which could pressure prices further. 42.8% of homes on the market have taken a price cut from their original list price. That's up from 41.9% last week, an increase of 100 basis points. While this may seem like a small shift, it's moving in the wrong direction. Typically, at this time of year, price reductions decline as new inventory enters the market and buyer activity picks up. But in recent weeks, we've seen that buyers are hesitant, waiting on the sidelines rather than making offers. As a result, sellers who aren't receiving offers are adjusting their pricing expectations. Taking a look at the chart, the black line represents 2025, and you'll notice that this week it turned upward slightly, a sign that price cuts are increasing. The gold line from 2024 shows that at this time last year, only 37.2% of homes had price reductions. That means price cuts are happening faster this year than expected, reaching a level even higher than in 2024. Last week, I mentioned the possibility of this shift occurring, but it happened faster than anticipated. By comparison, in early 2023, housing demand was rebounding after a weak Q4 2022, and price cuts declined as buyers returned to the market. That's not what we're seeing this year. Instead, the market is decelerating, and sellers are increasingly resorting to price reductions. Right now, buyer demand remains weak, and offers are scarce. This means sellers will likely continue cutting prices until mortgage rates come down and more buyers feel confident re-entering the market. For anyone considering buying, selling, or investing in 2025, these trends are critical to understand. Let's take a deeper look at what's driving these shifts and what to expect in the months ahead. This week, the median price for newly signed home sales contracts in Myrtle Beach came in at $429,882. That's up less than 0.5% from last week and remains flat compared to the same week in 2024. In other words, home price appreciation has stalled for now. While some markets across the country are still experiencing year-over-year price gains, others are seeing declining home values. Last week, I shared that the median listing price for homes in Myrtle Beach had recently dipped below last year's levels. However, this week, the median active listing price rebounded slightly to $451,695, putting it just barely above where it was a year ago. At Prize Capital, we track weekly home prices in different phases to give a clearer picture of market movements. There's the new listing home price, the asking price for homes just hitting the market. Next are active listing home price, the median price of all available homes. And finally, the contracts pending home price, the price at which homes are going under contract. This layered approach helps us see beyond headline numbers and identify where the market is truly heading. Now there's an ironic scenario that could reverse current trends and drive home prices higher in 2025, one where economic instability leads to lower mortgage rates. If the new administration enacts tax increases and spending cuts, the economy could slow. A weaker economy typically pushes bond yields lower. Lower bond yields lead to lower mortgage rates, making home financing more affordable. This exact pattern played out in 2019 when trade war tariffs slowed economic growth, leading to a drop in interest rates and a heating real estate market heading into 2020. Now I'm not predicting whether these tax policies will be enacted, nor can I say how strongly financial markets will react. But last week, we saw markets respond sharply to these tax threats, only for the situation to shift again. If bond yields fall as a result of economic uncertainty, we could see mortgage rates drop, potentially fueling another wave of home price growth. Wouldn't that be an ironic headline? As the economy tanks, home prices soar. While we don't know if this scenario will unfold, it's a possibility that could reshape home price trends in 2025. Looking at the chart, we're tracking the median price of pending home sales. The black line, 2025, shows home prices just under $430,000, holding steady with last year. The gold line, 2024, highlights last year's pricing trends. We expect prices to rise slightly over the next few months as we move into the prime home buying season. Even in a market with weaker demand, home prices tend to climb in the spring, as sales volume increases. That said, breaking past the $450,000 price plateau, which we saw last May prove difficult this year due to ongoing affordability challenges. For now, home prices remain flat, but economic shifts and mortgage rate fluctuations could alter the trajectory of the market in unexpected ways. The key is to stay informed and be ready to act when conditions change. Alright, let's talk about inventory. Right now we have 916 single-family homes sitting unsold in the Myrtle Beach market. That's actually a tiny bit lower than last week, but like I've said before, it's normal for inventory to bounce up and down a little in January. We typically see inventory bottom out in February before it starts building up for the spring market. But this year, it looks like we've already passed the low point. That's earlier than usual. What's interesting is that the down moves are smaller, but the upticks are bigger. That's a sign that inventory is already growing, and growing faster than we've seen in a long time. So why is inventory building so early? It comes down to two things. More sellers are listing their homes. Fewer buyers are making offers. It's the same dynamic we're seeing with price reductions. When demand is light, inventory naturally builds up. Right now there are 31.4% more homes on the market than there were at this time last year. So this isn't some sudden shift, it's been happening all year. But what's surprising is how quickly it's happening now. At the beginning of the year, we expected inventory to rise about 15% over 2024. But based on what we're seeing so far, we're now forecasting 17% growth by the end of the year. If you take a look at the chart, you'll notice a few key things. Every year follows a pattern, with inventory hitting its lowest point in January or February before climbing into the spring. At the far right end of the chart, you can see where we are today. And look at the past 3 years. Rising mortgage rates have led to rising inventory each year. Now how does this compare to previous years? We have 31.4% more inventory than this time last year. We still have 48% fewer homes on the market compared to 2018. But as we move through 2025, we're going to keep getting closer and closer to those pre-pandemic inventory levels. So what does this mean moving forward? Inventory is already rising earlier than usual. Homes are sitting longer, with fewer offers coming in. If this trend keeps up, we could see inventory return to pre-pandemic levels by late 2026. Now the big question is, how will buyers respond as we head into spring selling season? That's going to tell us a lot about where this market is headed for the rest of the year. Let's end by talking about home sales activity, because, ultimately, sales are restricted in the same way new listings are. We're moving less. People aren't moving across town as often. People aren't relocating across the country as frequently. I had expected this trend to ease slightly in 2025, with more people resuming their moves to Sunbelt states like South Carolina. But so far, that shift hasn't really happened yet. Now to get a clearer picture of home sales trends, we've taken weekly new pending contracts and plotted a 3-month delta to smooth out some of the noise in the data. So what do the numbers show? 61 newly pending home sales this week. That's flat compared to last week. Normally, at this time of year, we'd expect sales to grow each week, so at least we're not seeing declines. But compared to last year, new pending sales are 7.1% lower than the same week in 2024. With that said, is this the low point for 2025 sales? Sales have been trending about 2.7% lower than early 2024. But based on seasonal patterns, this should be the inflection point. If the market behaves normally, sales should start climbing from here. So when we look at the chart, you'll see, the 2025 black line has been running below last year's numbers. This week, however, broke that trend. Instead of moving lower, sales held steady at 61 contracts. While it's not a big jump, any stabilization is a good sign. So what does this mean for pending sales? Right now, there are about 480 single-family homes in contract. That's 18% fewer than a year ago. Since most of these will close in February, Expect the February home sales reports to sound bearish when they're released in a few months. In 2024, the weakest period for sales was late summer. That's the middle of this chart, where sales dipped. Mortgage rates had jumped again, and buyers got discouraged until September. Could 2025 be different? Now, what happens with mortgage rates this year is the wild card. If rates ease by summer, we could see a rebound in home sales like we did in late 2024. If rates stay high, demand could remain sluggish. Of course, this is just speculation for now, but it's something we'll be watching closely as the year unfolds. Any movement in mortgage rates could have a major impact on pending sales later this year. For now, the key takeaway is this: we may have reached the low point for sales this year. If we see positive weeks from here, that's a good sign for the spring market. Keep an eye on mortgage rate trends. They could determine whether 2025 sees real sales growth. Let's see where we go from here. And that's all the data we have time for today. If you're looking to make sense of this ever-changing real estate market, we're here to help. Call us or visit our prestigious office at Prize Capital in Myrtle Beach, South Carolina, where we'll guide you through everything you need to know about the housing market. You can also visit our website at prizecapitalrealestate.com, where you can now sign up for a free Prize Capital Real Estate Research account. With this account, you'll gain access to weekly local market data. And again, I can't stress enough that this live data comes out weekly with insights tailored to your area. Whether you're buying, selling, or advising, we'll help you dive into your local market and make informed decisions. Click the link below to get started. Thanks for tuning in, and we'll see you next time.